Bitcoin is about to pump, which means the rest of the crypto market is likely to pump in kind also. And today I'm going to cover the 4 technical reasons why this is very likely, especially because it's been very consistent in the near recent past. My name is Jagir. I'm featured in the best-selling book, High Probability Trading Strategies, back in 2008. And I've really just been trading the markets for over 15 years. I'm going to bring this to you. The video you're about to see is actually a private, timely report that I sent out to my private database. We base it around key reversal zones with Bitcoin. If you get value from today and you want to be notified of the next report at the next key reversal zone, which will probably be on a high, pop in your details on the opt-in. You'll get exclusive access to a membership area, past Bitcoin reports, but you'll get notified on the day when I release the next one. Enjoy the video, take plenty of notes. It's likely to be very accurate because it normally is. With Bitcoin right now, we're on a weekly chart, and I just want to initially break down the momentum position and how well it served us in the very recent past. So let's just look at this momentum indicator. Now I know I've got both. These are the 2 look back periods, but here we can see we've got a bull reversal and it coincided with this low very nicely. We had the blue line over here go over the red and it correlated with this low. We had the blue line go over the red and it correlated with this low. So where is the weekly momentum right now? And it's a leading indicator in the way that it's oversold. So it's given us a big clue that we are at or near a bottom that may last a number of weeks. And we want to take that very seriously because it served us very well for the last 1, 2, 3 times. And now this is the 4th time. So that's the first thing that's indicating we're at or near a weekly low. Now I think we're going to have a bit more of a lower movement. I'm going to cover the reasons why on the daily chart, but that's the first thing. The second, on the macro picture, now we don't need to force a wave count, but the best wave count from a perspective of buying and selling behavior, we've clearly had an impulsive move to the upside, and it looks like a pretty clean 5-wave structure. But over here, this is a bit of an unusual correction. Why? Because normally, like here, when we've got this overlapping wave structure, this was more than enough to be an end of a correction, and it did respond, but it didn't have follow through. It continued in an overlapping wave structure. So there is a type of correction, which is the first correction. You have some type of move in between, which we call an X, and then the next correction. And it looks like an ABC structure. And we're going to really lean on this part because it looks like it's breaking down to a 5-wave structure. Clearer to see on the daily chart, which we'll go into in a second, but a 1, 2, a potential 3, 4, probably one more low to be made. And if we can identify this low over here, and if it does occur, coincided with the weekly momentum at a Fibonacci price, now all of a sudden we have a high probability end of a intermediate trend, and we're probably going to get a trend reversal. And we also want to look for signals. I like to call it pattern reversal signals, something that the market does that indicates that the bottom is in and that we should look for a follow through to the upside. And if we get that, this high may get exceeded. And if it does, that's going to be a big bullish sign for Bitcoin. So let's now jump into a daily chart. Now I'm just focused on the last part of that move. And as you can see over here, what I've drawn is we've had an initial move to the downside. It's been corrective, pretty much sideways, a very aggressive move to the downside. And then we have this move here. Now at this point over here a few days ago, we weren't sure if the low was already in. But we've had something called a pattern reversal signal to the downside, which I just want to talk about because there's some big clues from a technical position. And then we're going to do some price and time targets to really see if we can pinpoint the end of this local trend before we may see a big movement to the upside. So the key thing with the pattern reversal signal was this wave overlap. This here, we see this high, this low, and then this high. Now, if we just draw a line across on the closing part of the data, we can see that Bitcoin has come back down and closed below this swing high over here. Now that's a sign of weakness, right? When a trend continues to the upside as an impulsive structure, you don't tend to get wave overlaps. So therefore that indicates that this is likely to be a wave 4. Now I'm just going to put a question mark here because this wave 4 is not confirmed. So let's just pop in a question mark. Let's make it green and let's just make it a bit bigger as well. So we've got it nice and clear sitting with us over here. So what does this tell us? Well, because we've already had this follow through to the downside, we can start to do end of wave 5, and it's likely to be end of a wave C, a 5 of a C, of a wave 2 of B. Now we don't need to get too anal about it. We're going to look at the minimum expectations if this trend completes and we get a reversal. And then we'll also look at if the trend really takes off. It might be sideways to up for 2, 4, 6, maybe even 8 weeks. And we'll look at that also on the weekly chart. So let's just now break this down. So the most reliable end of wave 5 target price zone is the Fibonacci external retracement. So what we do is we're going to take this low, we're going to take this high, and we're going to measure it. And we're going to use the external retracement, which is external to this zone here. And the two key ratios that you really want to use for end of wave 5 external retracements is 1.272 and 1.618. So let's just now do that with on TradingView. I'm going to do it in line with the wave 4. I'm going to take the low of that potential wave 3. We'll take this high over here. And the key ratios that we want, if I can go over here, is going to be the 1.272 and the 1.618. And you can see it coincides and really overlaps nicely with the 50% retracement. And you might be thinking 50% retracement of what? So let's just quickly go back to the weekly chart. So what we did was this move to the upside. The retracement of 50% to the downside is over here. And this is the zone we really want to be aware of, because most corrections typically reach a minimum of 50%. So we can see that overlap. So that's really, really important for us. But we can do better. We can also do the end of wave price targets. It's called the alternate price projection, or in TradingView, it's called, what's the tool called? It's called trend-based fib extension. What we're going to do is we're going to measure the beginning of this wave C, or the 5-wave structure, the end of the wave 3, and we're going to take it from the top of the wave 4. Now, the two typical, most common, is 32% or 38.2 and 62%. But we also want to be of the typical maximum of the 100%. And you can see the 100% is all the way down here. And that's really close to this zone as well. So we want to keep that. 38.2 is not that relevant, but the other two are. So now we can just extend this over here. So now we've got a very high probability price zone. So what am I personally waiting for? Well, I would like to see a bullish momentum reversal on the daily chart before considering a long trade position. So what is that referring to? It's referring to this over here. We can see we've got the bearish reversal. It coincided nicely with this top over here. Now what I would like to see is the red, which is the slow line, go over here, and then the blue line to also go over here and cross over the red. And it will look something like this. Now that will put the probability in our favor, knowing that the weekly is strong oversold. We can see that in the dashboard. Strong oversold, which indicates we're at or near a weekly low. And the next daily bullish reversal, which will be over here, would indicate potentially, especially if it gets into this price zone, that we're at the end of a 5-wave psychological selling behavior where we're probably going to get a trend reversal. To add to that, now we might not get it, but what would be also ideal is if this fast line blue is also below the 25 line. And then this down here will read strong bull reversal or uptrend, and then here will change from standing aside to consider buying. Make sense? So this is really, really important. So now let's just look at some of the nuances on some of the things that we can consider if we want to be a bit more patient and wait for a pattern reversal signal on the downside. So I'm just going to take the closing data, and I want to take the lowest point over here. I think the low is, let me just double check if it's this one or this one. That's 26,048, and this one is 26,042. So this one's a bit lower. So I'm just going to take this low over here. So one of the ways that we can approach this market is wait for the price. If it does have a bit more of a sell-off, gets into this zone, and if it crosses back over into this wave structure, this closing here, that's called a pattern reversal signal. And that would be an early indication along with the bullish reversal, if we do get the bullish reversal, with the pattern, but also the momentum, the pattern reversal signal. And sometimes we don't always get it. It's good to wait for the pattern reversal signal and then wait for the first pullback. And if we get that first pullback, there'll be a nice, obvious long trade setup. I'm going to cover two more things with you. We're going to go back to the weekly chart. We're going to get a bit ahead of ourselves that if this occurs, what is the likely minimum expectation and then the macro expectation if the trend really does take off. I'm also going to drop down to a lower degree time frame on either the 4-hour and the 1 hour just to see if there is an initial clear pattern structure that we can pay attention to. And if there is, we can see what can help us identify the low. So anytime you see a 5-wave structure unfolding here, 1, 2, 3, looks like a clean ABC, and then a follow through to the downside, the minimum expectation is based on this move over here. So even though the low's not in, if we just project for a second that the low is down here, if it does get to down here, we'll take this with a pinch of salt. As the data unfolds, we can update this information. But the typical minimum expectation where I like to get risk-free, I'll just do it over here, is I'll take a retracement from the high to the low of the 5-wave structure. And the key ratios you want to be aware of is 50, 62, and 78.6%. That's the most typical minimum and maximum. And in terms of time, we can also, again, the low's not in yet, but so I'm just taking it with a pinch of salt, or do take this with a pinch of salt, is the 38.2 to 62%. Now you can see that's not showing up on the chart, so I'm just going to squeeze it in a bit and pull it to the left-hand side. And we can see those two lines over here. So I'm going to draw a pink box to make the minimum expectations really clear. So in other words, if we do get a follow through to the downside, the minimum that we may get is some type of A, B, C structure. Always anticipate a minimum of 3 waves, and if it overlaps into this structure, we might have further downside movement. Now this is the less likely thing to occur, mainly because we've got that weekly momentum in our favor on the upside. But if this happens, we need to be aware of this as well. And also what I like to pay attention to is if we do get the low over here, is the movement to the upside, if we do get a movement to the upside, is it impulsive, as in a 5-wave structure, or is it corrective with an overlapping wave structure? That will also be a big clue. If it's impulsive, this will indicate this low is going to hold. But if it's corrective, it's basically indicating this, correcting overlapping structure, and we're probably get another move to the downside. Now, we don't know which is going to be at this stage, and there's no way of knowing because we don't know how the macro psychology is feeling, but we know the odds are in our favor to look for a long trade setup. So now let's just look at a lower degree time frame initially to see if there's any pattern position with this structure over here. And then we'll move over to a weekly chart just to look at the macro viewpoint, because this is the micro viewpoint as the minimum expectations, but then we can also look at the macro expectations if the trend does really take off. And again, we can update that with new information as well. So let's just initially go to the 4-hour chart. And I just want to zoom in over here. So what does this look like to you? I'm looking at this with fresh eyes. And even if we just get rid of these lines, let's just keep this to the, let's just remove these lines from the hourly chart or the 4-hour chart. What does this look like to you? Well, to me, straight off, this looks pretty impulsive to the downside. And it's the first correction to the upside. And then we've got a more aggressive move to the downside. So what does that look like? Well, it looks like a potential wave 1, a potential wave 2, and a potential wave 3. We may get, a further move to the downside for the wave 3 to get confirmed, or we may get some type of wave 4 and then another move to the downside. Now, if it unfolds like this in an impulsive move to the downside, this is going to be some very useful information where we can start to look to pinpoint the bottom and look for an earlier pattern reversal signal so we can get an earlier entry going long on Bitcoin. Then last but not least, let's just finish up on the weekly chart. If we just zoom out, let's just squeeze it in like so. And I'm just going to get rid of this information here for a second. I know there's a lot going on the chart. Let's just do it like this first so we can get a real clear picture on what we're going to do and what's most common. So just to summarize, we got the weekly momentum. So we're anticipating a weekly low. We've got an impulsive structure, which could be a potential 5-wave structure here. This looks corrective, some type of unusual move, which we're calling an X, and then another ABC structure of some sort. So what are we anticipating? Well, more often than not, if we've got this correction and the correction completes, but what happens after a correction? Well, it's more often than not is a continuation of the former trend. What's the former trend? Well, it's this upward movement. So the minimum expectations is we will measure the past upward movement, which is from here to over here. We can measure this. And the minimum is that we get a replication of that. So it will be a 10A, 20B, and a 30C. So this is the 100%. I'll draw this on in a second so it's a bit clearer. 100% of this move over here. But then, more often than not, the next level is the 1.618. In other words, we take this measurement, the exact same measurement, but rather than projecting 100%, which is it's almost like the twin, it's going to be an extension of 1.618. So it's typically bigger. And again, we'll draw this on in just a second. And it's the 1.618, which is 162%. And this is more typical of a maximum wave C or a typical wave 3. And we don't need to concern ourselves which is it. We just know either one, we can make some good money on the upside. So now let's just do that. Let's bring the drawings back onto the chart. And we can now project those as well. So we're going to use the trend-based fib extension tool on TradingView. And again, we don't know where the low is because it hasn't been confirmed yet, but we're just going to take it as this point over here because that's the biggest cluster point that we've got from Fibonacci price. Again, when it gets confirmed, we'll fine-tune this so we can get more accurate information. So I'm going to do it in line with this over here. I'm going to take the low of that previous trend. We'll take the high, and then we'll take it from this green line that we've drawn. And again, the two ratios that we want is going to be the 100%, which is the red. We can see that over here. And then we also want the 1.618, which I draw in as a green. So now we have a clear trend expectation. How about how long it may take? So we saw the minimum expectations on the daily chart. What about the weekly chart? Well, again, the way we did the price expectations, we can also do it in terms of time, which is most common and most typical. It doesn't mean it's going to occur. It just means it's what's most highly probable. And the big clue is how long did it take for this 5-wave structure to unfold? And then from the low, we'll take it from this point over here. We're going to project that forward as 100%. So again, we're treating it like the twin. But rather than also do the 1.618, what we're going to do is we're going to do something called the low to high. And we're also going to do the high to the next high as well. And then what we'll get is a time zone. But as the market unfolds, if it does unfold like a 5-wave structure, as we get this new information, we can start to pinpoint the structures because we've got more price action, which gives us more valuable insights in terms of what the market is likely to do. So now let's just use the trend-based fib time tool. We're going to take this low to this high, and we're going to project it from this point over here. And again, take it with a pinch of salt because the low is not confirmed yet, and we don't know if it's going to be confirmed. But again, that's what we're anticipating, and we want that 100%. We'll be aware of the 1.618 as well, which is there. That's a typical maximum. And then we'll also do, like what we said, the high to high to high, which is all the way over here. This is probably going to be less relevant, so I'm actually going to delete that. And we're also going to do the immediate low to low to low and the macro low to high. Don't worry about what I'm saying there. I know there was a lot. I cover it in more detail in the courses that you should have. I'm just going to get rid of the 1.618. And we're also going to do the low to high. This is like the typical maximum is off the charts, which it's not that relevant. In fact, I'm going to get rid of it. It's more relevant if we go past the extremes. That's the more important part over here. So now we can just draw a price zone of the most typical behavior that we want to be on high alert for. The other thing that I'll be also looking for at the time is if the momentum indicator on the weekly becomes overbought and comes up here, and especially if we get a bearish reversal, if the blue comes over here as well, and then the red goes below the blue. Now, because these have been very useful for us as well, the highs have been very useful for us. You can see they correlate very nicely. Not perfect, but very nicely. Again, not perfect, but very nicely. It gives us some valuable insights. If and when the weekly momentum is overbought, and if we do get some type of 5-wave structure into this zone, we will use the same methodology, double time frame momentum, pattern price, and time to see if we can project the top. But I'm getting a bit ahead of myself because initially what we need to immediately do is identify the low, use the information that we have at hand, and if we do get a reversal, be aware of the typical minimum. And if we do get an impulsive structure that breaks the high over here, then we can start looking at what's likely to occur as the market unfolds. And again, we don't know what's going to happen. All we can do is get the odds in our favor, knowing that the momentum is indicating we are at or near a weekly low. And based on what we spoke about earlier, we're anticipating a bit more of a lower movement. But when we get the next daily bullish momentum reversal and the price action. And then the next thing that I'm looking for, either on the 4-hour chart or on the daily chart, is a pattern reversal signal. Something that the market does that tells us that the market has reversed, and it increases the probability of it following through to the upside. Now, what that does for us is if we're patient for that and we put in an order in there, we just have a higher probability of the trend unfolding. And then we can look at capital exposure in terms of how much we're willing to risk to find out if we're right. For me, it's probably going to be 2% of the account size that we're going to look to trade this on. And then we'll look to ride this trend. And again, I will look to get risk-free at this point at the minimum expectations. And then if the trend does take off, we know we've positioned ourselves for the maximum probability for the market to follow through to the upside. So there you have it. Now you know how Bitcoin is likely to unfold over the coming days and weeks. We're going to use that valuable information, but always know, because I don't watch the news, I'm aware of the news, but I know that the fundamentals, the FOMO, the FUD, all the fundamentals are already baked into the price. So by just looking at the pure technicals, based on 4 confluence of events, double time frame momentum, 2 or 3 degrees of Elliott wave counts, 2 or 3 degrees of Fibonacci price ratios, 2 or 3 degrees of Fibonacci time ratios, and we've got the confluence of events combined with a pattern reversal signal that hasn't occurred yet, we're waiting for that, then all of a sudden we've stacked the odds massively in our favor, and now we can take that trade with confidence, knowing that if Bitcoin does act in kind, that is also going to impact the rest of the crypto markets. And if we do break that recent swing high, then we're probably going to get some big bullish movements to the upside over the next 2 to 6 weeks.